All right, folks, I'm traveling for 4 weeks, so I'm not sure if I'll be able to put out these video market outlooks. But whenever I can do that, I'll just switch to the blog format that I use sometimes. Let's start with a quick recap of last week. So, Nvidia was the main event last week, as we all know. And as expected, Nvidia came out with blowout earnings, and obviously the next thing that happens after a blowout earning is all-time highs, and we are seeing evidence of that happening. And then I believe that Nvidia will just keep going up from here. On May 23rd, Dow Jones dropped 768 points in a day, and there was no apparent reason for this to happen. There was no significant macroeconomic data that came out. There was no like earnings disappointment. And this was when something like that happens, a massive profit taking event like that happens, you just cannot ignore it. So I'm just pointing out that Dow Jones has reversed direction starting May 20th. We don't know how far we'll go down, but just watch out for this trend change, and Dow Jones could lead this entire market down from here. So now let's switch to SPY, where I have highlighted some important things for you. So first of all, I have those Fibonacci extensions plotted for you, and 51 and 61.8% are levels where markets could reverse, and markets are kind of struggling around. SPY is struggling around 61.8 retracement level. That's one thing. The other thing is, on May 23rd, the same day when I was showing you that Dow Jones dropped 768 points, SPY and QQQ both flashed a massive bearish engulfing candle, and that's the one I have highlighted here. Now, with bearish engulfing candles or bullish engulfing candles, these are, if you are a technician, market technician, these are considered significant at the top or bottom of a trading range. So in our case right now, markets just made a fresh new highs and a bearish engulfing candle showed up. So it's considered significant. Now I have highlighted some other examples for you in the recent past of when such a candle showed up and what happened next. So the last example was on April 4th. Markets were at the top of their trading range, making new highs, and once this happened, we went into a, I think, 5% pullback. That's one example. Now if you go back to July 27th, again markets were making new highs and a bearish engulfing candle showed up, and then we had a decent sized pullback. That's one example, and there are two more examples. One is on February 9th of last year, and then the other example is November 1st, 2022. So now, as I mentioned earlier, with these engulfing candles, they are most significant when markets are making new highs. I've also shown you this area around August 24th, where a bearish engulfing candle did show up, but it was not significant. Why? Because markets were not at the top of their trading range. In fact, if you look at this, markets just bottomed out, hitting the lower Bollinger Band and then bouncing back up. So the bearish engulfing candle is not significant at this point. They are mostly significant when they show up at the top or the bottom of the trading range. So having said that, I do want to point out that if you look at VIX has been crushed again to all-time lows. And as long as VIX stays below 15-16 area, then that bearish engulfing candle will not play out. Not play out meaning we will not see a trend change, and it will be like a false candle. And as you know, with technical analysis, false positives are everywhere. So you just have to find out other indicators to confirm what your charts are telling you. And in this case, VIX is the easiest thing to get that confirmation. Okay, so now let's have a quick look at market moving events next week. And we do have a bunch of Fed speak happening at the beginning of the week, starting Tuesday. Whenever these Fed presidents come out and speak, markets are just looking for hints on what the next interest rate move is going to happen. Now, based on what we have seen in the last couple of weeks, the Fed has suddenly turned hawkish, and they've been clearly saying that we are not seeing any signs of inflation slowing down, and inflation has become sticky. So that is the narrative that they have been putting out, and I don't expect to see anything different from these speeches. So I'm not paying too much attention to that. What I am paying attention to is Thursday and Friday. So Thursday, as usual, jobless claims always moves the markets. That's one. Then we have GDP coming out. That's going to move the markets again. But Friday is the main event of this week because we have core PCE coming out. So if you remember, a few weeks ago we had PPI, which came out really bad, and then it was followed by CPI, which was actually not bad at all, and market just shot up. So it's an unknown how PCE is going to look like. PCE is Fed's preferred gauge for inflation. So this is the one that they pay attention to. So watch out for Friday, as that's going to move the markets again. Now, the tricky part about PCE coming out on Friday is that the bearish engulfing candle that we saw, if that starts playing out, markets will keep dropping this week. But if PCE comes out good on Friday, that whole move can get reversed. So again, this is the environment we are living in, where almost on a almost on a weekly basis, we get some kind of data like this, which is capable of reversing the markets. And that is one of the reasons why I've been trading at 10 to 15% of my portfolio allocation for almost 2 years now. Unless we get out of this inflation data obsessed environment, I don't think I'll be able to convince myself to deploy 30% of my portfolio. Now let's look at the earnings calendar real quick. So as you know, all the big market moving earnings are behind us already. We will keep seeing some earnings keep trickling in every week, but there is nothing like Nvidia, Microsoft, Amazon, Google. All those things are behind us. So for this week, the only thing I'm seeing is CRM, Salesforce, Okta, that's part of Nasdaq. What else do we have here? Anything interesting? Costco, it will be interesting for Dow Jones. Dell is insignificant. Ulta is consumer discretionary, that's a decent one. And then MongoDB is part of Nasdaq. So apart from that, not much going on. Really, what's will move the market next week is the GDP jobless claims on Thursday and PCE on Friday. Let's look at the relative rotation graphs real quick. So let me center this. So I've been pointing out for several weeks now that XLK, in fact, let me just drag this back when it started. So starting the week of April 15th is when XLK or tech started entering the lagging sector, the lagging quadrant. And ever since then, I've been telling you guys that if you want to look for bearish setups on tech stocks, this could be that time. And frankly speaking, XLK has been in this quadrant ever since. Now, of course, with earnings like Nvidia, things can always change, and Nvidia did come out with blowout earnings, and you can see that XLK is slightly beginning to move up. We don't know yet because remember the bearish engulfing candle that we saw on SPY and QQQ. If that plays out, XLK will keep going down into the lagging quadrant. So XLK consumer discretionary, as I have pointed out in my earlier market outlooks, for the markets to go up and make new highs, these two sectors are considered the risk on sectors. So if money is not flowing into these sectors, it's very difficult for markets to keep making new highs. And both of these sectors are in the lagging quadrant. So I think it's very significant in my opinion that these two are in the lagging quadrant. Or bearish engulfing candles which show at the top of a trend, they are considered significant, so don't ignore that. So let's see how next week plays out. And so now if you look at XLK, if you watch my video on RRG charts, you must remember that the way you could use these charts to find trade setups is first you identify a lagging sector, then you find stocks in the lagging sector to put on bearish trades on. So if you look up, I pulled up XLK, and these are all the members of XLK, and this is the list at the bottom. If a sector is in a lagging quadrant, it doesn't mean that every single stock in that sector is dropping. So there will always be stocks which are showing strength. There will always be stocks which are showing weakness. So in this case, you can see that Qualcomm, NXPI Semiconductors, Texas Instruments, Microsoft, all these are still showing strength. But if you look at the bottom part, that's where you will find bearish setups. So Intel, Adobe, Accenture, Autodesk, PanW, all of these are showing weakness. So let's see how next week plays out. My suggestion would be, if that bearish engulfing candle plays out and markets continue to drop, I would start taking bearish trades next week, bear put spreads or whatever your trading structure is. But I would save a decent amount of capital allocation for Thursday and Friday because of core PCE, GDP, and jobless claims. So let's say you typically take 6 trades a week. By all means, take 4 bear put spreads if the markets continue to drop, but save some allocation for PCE. So if let's say PCE comes out bad, inflation is high, markets will continue to drop and will most likely go into a correction, and all the bearish setups that you took, they'll play out perfectly fine, and then you can add more on Friday. However, if PCE comes out good and for some miraculous reason inflation is under control, then markets will immediately reverse course, and you need some allocation to be available to you, some money to be available to you to counter that trend change. So the 4 bear puts you took, you can take 2 bullish trades and maybe close out 2 so that you're balanced between bull and bear. So that's it for this week. Let's see how next week plays out, and I will try my best to record these video market outlooks whenever I can, time permitting and location permitting. And I'll see you tomorrow.